Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the best penny stocks that could surge over 400%. Now, as a reminder, penny stocks are extremely risky. However, the risk to reward is very high to where these very cheap investments could send your overall portfolio value soaring to the skies. But by all means, remember to do your own research and don't over allocate yourself to risky singular growth stocks. But in today's video, we will be talking about some stocks that could surge by over 400%. So for more videos just like this one, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's just jump right into it. The first company we're going to talk about is EyePoint Pharmaceuticals, ticker symbol EYPT. EyePoint Pharmaceuticals, as you probably have guessed, is a pharmaceutical company that focuses on the discovery, development, and commercialization of treatments for various disorders or diseases involving your eye. And the end goal of this company is to make you see better. The company has two main products on the market right now. However, I'm more focused on their pipeline of future products that could potentially enter the overall market, thus increasing their overall revenues and earnings per share. In essence, if these newer products enter the market, the company will increase on their overall financials and fundamentals and therefore increase the overall share price. Some of the treatments currently in their pipeline that have not been released to the market are currently in clinical trials. So in the clinical program, we have EYP-1901 or EYP-1901, and this drug candidate is an experimental treatment for essentially macular degeneration that causes or can cause blurred vision or blind spots. This would be very good for people because we don't want people to have blind spots or overall blurry vision, to where EYP-1901 is currently in their pipeline to be approved, but as of right now they are being investigated. They also have a few other drugs in their pipeline showing very positive 12-month safety and efficacy results. This means that these overall trials are going pretty well for this company, to where they will eventually release these new types of products to the overall market on top of their two products that are already on the market, giving them revenues as we speak. The company has already started dosing patients for their phase 2 trials. So eventually it seems that if all the trials go well, these drugs in their pipeline will make it to market, thus reflecting very positively on their overall financials. As of quarter 3 of 2022, they produced net product revenue of around $9.7 million, which represents an increase of 13% when compared to a year ago. Clearly, this would communicate to us that they are not only growing as a company, but that their current products on the market are doing quite well. Right now, the current share price trades for just $3.35, which seems rather odd because right now, several professionals and analysts say that right now is the time to buy this company. But why are they saying this? Well, take it from a Guggenheim analyst who says, and I quote, "EYPT is using a completely different paradigm. Long-lasting TKI erodible insert to keep dry eyes dry, to extend dosing and reduce the treatment burden in patients with wet AMD. This is a pivotal year for the company as data from the randomized DAVIO-2 study or DAVIO-2 study in wet AMD are expected in quarter 4 of 2023. Given our high conviction on a positive outcome for DAVIO-2, which is likely to drive substantial upside in share price, we are adding EYPT to our top 3 picks for 2023. We model risk-adjusted peak sales for EYPT-1901 of $825 million. End quote. So if this ends up being approved, this company could come into a load of overall money, which is why right now many professionals have a buy rating on this company and a $52 price target. Just imagine the current share price is $3.35. However, this company could potentially, if analysts are correct, which we should take with a grain of salt, could surge to $52 per share. This implies a growth rate of around 1,452% regarding their upside potential growth rate from the stock's current share price to what it could be worth just over the next year. Other analysts have also chimed into this stock, giving price targets that range anywhere between $21 on the low end to $52 on the high end. This would also equate to an average price target of $32.80. But in my opinion, if any of these stock price targets come true, you are looking at minimum around a 7x increase in their overall share price, well over a 400% return. As of right now, 5 analysts cover this stock, but I think around 2 of them will eventually drop out. But what I'm not impressed about for this company is that we don't have any heavy-hitting analysts. And what do I mean by that? These analysts either have no stars or 2 stars, and that's not very impressive, and here's why. Normally, you would want to consult analysts who have anywhere between a 3 and a 5 star rating, and their star rating is directly reflecting their overall past predictions. The more star the analyst has, that means the more often he is right. These particular analysts who give these very high price targets don't have a fantastic track record, although the 2-star analyst clearly is right below a 3-star analyst to where he's right some of the time. But again, take this with a giant grain of salt. But regardless, even if the analysts are wrong, if they are expected to gain or enter a market that's worth around $825 million for their newest product, if the clinical trials go well and they release it to the market, this will act as a positive catalyst which will increase their current share price. But with that being said, let's move on to our next company, ticker symbol DRTS. And their name is Alpha Tau Medical, which is a biotechnology company that is working on new modes of focal alpha radiation treatment for various cancers. So what's so special about this particular company? Not to mention that cancer and diabetes are one of the highest grossing medical needs in the country and across the world, as well as various heart conditions. So with this being said, how can this company add to this overall market, and can they squeeze out some market share for themselves? Well, I like their technology because they're giving a high level of precision that will target only the tumor while sparing the nearby healthy tissue. So essentially, through their alpha radiation treatment, they get to make precise movements to where it's only attacking the cancerous tumor instead of the healthy tissue that's around it. Because normally, you have some collateral damage to where some healthy tissue also ends up being damaged through radiation. So I like the precision of this overall technology. The company has also outlined several steps to put the company on track toward active clinical trials, so this technology is not being used in hospitals right now. However, currently the United Kingdom has given the company regulatory approval for the trial and treatment for a particular type of cell carcinoma, and on top of that, Canada has also given regulatory authorities the approval for a second site for clinical trials regarding the treatment of advanced pancreatic cancer. So overall, we're seeing this company move forward in the United Kingdom and Canada, and these are going to act as catalysts for the current share price potentially. Now, I personally would wait for these companies to prove themselves before I personally would invest, but I at least want to put them on your radar. But as of right now, I am not invested into either of these companies. I'd also want to make you aware that there is a huge milestone coming up for the company, which would include the Israeli feasibility trial for the treatment of pancreatic tumors, which will start in Q1 of 2023, which we are in right now. Thus, that communicates to us that this company is literally going through trials right now. But what do professionals think about this? Well, one professional analyst says that ticker symbol DRTS has demonstrated competency and clinical execution in our opinion. We also note the continued efforts around building a strong body of data to support the clinical and regulatory opportunities for the Alpha DART technology. Overall, we are encouraged by the progress to date and the multiple near-term milestones as well as potential catalysts. As such, we continue to view DRTS as an attractive investment opportunity compared to peers." End quote. So what are some of the price targets for this overall company, and what's their current share price? Well, right now they trade for around $3.21, and analysts give them a buy rating and an $18 price target according to this analyst, which would equate to a 460% upside potential growth. Now, what I like about this company more than the prior company is that we have a heavy hitter analyst here. We have a 4-star analyst, and she gives them a buy rating and a $23 price target, even higher than the other analyst, giving it only an $18 price target. And she reiterated a buy rating as soon as 2 months ago, to where this company could surge by 616% if these trials go well. The main thing to take away from this company is, although the current share price trades at $3.21, even the lowest price target of $12 is almost 4 times higher than the current share price, giving this company phenomenal upside opportunity for their share price to appreciate over the next year. The higher end share price actually comes from the 4-star analyst of $23, and the average price target, if we average the bullish and the bearish price targets, we get $17.67. But as you can see on screen, all of these analysts believe the company is undervalued as of right now. However, what I would criticize in this company is that only 3 analysts are reviewing this company right now. I want more analysts and professionals to give their thoughts and opinions on this company, because we can't go just off of what analysts say. We need to do our own research, look at the fundamentals of the company, project their future financials, and see how this is going to impact their stock price. Now, what I do like about the company is that they, just like the previous company we talked about, are doing clinical trials right now, and it seems that this technology is going to be very useful for the general public. So with that being said, I would love to hear your thoughts about both of these penny stocks. Go ahead and smash that like button for more videos just like this one, subscribe if you are new, and I will see you in the next YT video.